Good morning, everyone. My name is Manoj, and thank you for participating in the Risk and Compliance webinars from Risk Pro India. We'll be starting in a minute or two. We'll just give a couple of more people some time to join in. In the meantime, I just wanted to share two slides with you about Risk Pro and about the logistics of the webinar. So Risk Pro is an Indian risk management and consulting firm. We have been in business for over 7 years, and today we have 350 plus clients, a team of about 45 risk professionals working in the areas of risk management and compliance. Basically, we are spread across multiple cities through either our own setups as well as our network and the member firms. And in terms of the logistics for today, on the screen, you will see certain logistics. So our topic of the day is going to be insider trading and the new amendments. That will take approximately 50-55 minutes. And we'll have some questions towards the end of the session. You can post your questions through the chat window. There is a section called send question to staff. Once you're able to send those questions, we'll take it up towards the end of the webinar and then respond to those as time permits. Everyone is in mute only mode, so you'll not be able to talk, but you can raise your hands and chat through the window if there is any concerns you have. I hope the audio is okay. If there's any problem in the audio, you can also raise your hand and let us know. Some people might experience network connectivity challenges. That may be more at your end, but if there's a common problem, we would come to know and we'll take it over. So let's get started because this is an important topic and there's a lot to cover. In fact, this is really picking up in terms of regulation, and it's important that all of us understand the significance of this as well as the impact it has on companies. I'm the co-founder director of RiskPro. Along with me, there are two other colleagues today. One is Sachin. He'll be taking over the first half of the webinar, and he's vice president. And Lakshmikant Gupta will also be supporting us with his practical aspects on the topic as needed at different points. So I'll just now go over and hand over to Sachin, and he will take over with the topic, which is definitions, amendments, and the overview of those changes. Sachin, over to you. You are currently on mute, Sachin.
Hello. Very good morning. I'm Sachin from Risk Pro India Limited. I'll take you through the session of webinar about insider trading from SEBI. So to start off, SEBI had issued guidelines or amendment regulations in the year 2018. So this is applicable to all the public companies listed under any of the stock exchange. Even though this has been issued on 31st December 2018, the amendment will take effect from 1st of April 2019. Okay. What do you mean by insider trading? So, as the name suggests, it is the buying or selling of a security by someone who has access to material non-public information about the security. SEBI has its own definition or under the guidelines. It's about who is connected with the company and who could have unpublished price sensitive information, or you can call it as UPSI, or receive the information from anybody in the company. So the today's objectives of the insider trading laws is to protect the interests of the investors, rationalize and strengthen the existing regulatory code. Insider trading is one of the most severe non-compliance SEBI is not forgiving when it comes to insider trading, and not to forget the capital markets. So, who are connected persons? So, the next question will be about, once we say that they have the connected persons are not supposed to give up with the UPSI, then the question comes, who are the connected persons? The connected persons can be categorized into three levels. One is the person who are connected to the company, persons who were connected or who were in some way associated with the company, who are deemed to be connected to the company from an outside organization. So employees, directors, management employees, CEO, all those things they come under the connected to the company. So the ex-employees or any association of ex-employees comes under the persons who were connected with the company. External auditors, bankers, and stockbrokers comes under who were deemed to be connected to the company. When does a person become an insider? There are three conditions that have to be met to define a person as an insider. The person should be a natural person or a legal entity. The person should be connected person or deemed to be connected, as explained in the previous slide. Acquisition of the unpublished prizes, sensitive information by virtue of such connections. Generally available information means information that is accessible to the public on a non-discriminatory basis. Unpublished price sensitive information. The short explanation may be any that is generally any information that is not generally available. So a long explanation means any information relating to a company or its securities, directly or indirectly, that is generally available, which upon becoming generally available is likely to materially affect the price of the securities and shall ordinarily be restricted to information relating to the following, like financial results, dividends, change in capital structure, mergers, demergers, acquisitions, change in key material personnel, and material events in accordance with the listing agreement.
So just to add a point to this, Sachin,
Yeah.
when we come to all these different types of information that is communicated by companies,
Mhm.
what are the most types of examples when it comes to insider trading? So what is the most prevalent information that is generally not available to the public?
The most important will be the unpublished price sensitive information
Yeah,
of the
and those,
UPS.
as you would know, like in today's world, we have a lot of company buyouts that are happening. We have situations such as we had the recent RCOM example where there were court orders going along. There was a potential, buyout, recoveries. We have all these, and again, examples of Jet Airways and the activities that are happening on the background. Now, each of these scenarios has several cases where information is restricted from the public, and if something were to be leaked out through illegal means, then that will result in insider trading. So today, although this gives a definition of 6 categories of information that is considered unpublished, but if you look at them, each one of them is significant enough to ensure that all the information that is supposed to be restricted is actually restricted. And in fact, the sixth one you see on material events in accordance with listing agreement. So SEBI has kept that open, which means that any information that falls in those listing agreements as considered a material event would be something that is considered unpublished and should not be made available unless it is properly disclosed. So that's a residual bucket, and that brings pretty much anything that the regulators may consider to be significant or price sensitive. Continue.
Yeah, fine. So there have been a lot of movements from the SEBI regarding the insider trading. As you can see that most of the companies have to comply by April 1st of 2019 with whatever the regulations that have been the amendments that have been passed on 31st December 2018. So also there have been a few violations regarding the from S Bank, for which SEBI is conducting a probe. So we can go with a normal hypothetical or everyday example. Say, for example, a vice president of the engineering department of a technological company overhears a meeting between the CEO and the owner. 2 weeks before the company releases its earnings, 2 weeks before the CFO discloses the CEO that the company did not meet its sales expectations and lost money over the past quarter. In this case, the vice president of the engineering department knows her friends own shares of the company and wants her friends to sell her shares right away and look to open a short position. In fact, this will be an example of an insider information because earnings through this has not been released to the public. Have not been released to the public. Suppose the vice president's friend then sells her shares and short 1,000 shares of the stock before the earnings are released. Now it is illegal insider trading because she had prior information about the fall of the prices beforehand before it was made public to the in the general market. However, if she trades the security after the earnings are released, it is not considered illegal because she does not have a direct advantage over other traders or investors. So one of the major this one scam that has happened in recent memory is regarding the Rajaratnam, this one for Goldman Sachs. As head of a 7 billion hedge fund, Rajaratnam's phone often rang off with the hook, and many of the calls were from corporate insiders and provided a gold mine of market moving information. Rajaratnam tapped a vast network of Wall Street insiders to funnel him inside information, and later on he was convicted for conspiracy and security fraud for illegally using inside information to trade in stocks such as Goldman Sachs, Google, and Hilton. He was sentenced to 11 years in prison. What are price sensitive information? Price sensitive information as it is can be broadly defined, but for the purpose of insider trading, we can consider as the periodical financial results, intended declarations of dividends, issue of securities or buyback of securities, any major expansion plans or execution of new projects, amalgamation and mergers or takeovers within the intercompany. This. So now we'll proceed with the case studies, or that will include real life examples as well as a hypothetical example. The hypothetical example for the CEO of a company divulges important information about the acquisition of his company to a friend who owns a substantial shareholding in the company. The friend acts upon the information and sells all his shares before the information is made public. A government employee acts upon his knowledge about a new regulation to be passed, which will benefit a sugar exporting firm and buys its shares before the regulation becomes public knowledge. A high level employee overhears some conversation about a merger and its market impact and consequently buys the shares of the company in his father's account. Now we'll pass on to the real life cases where such instances have happened. The first case that comes into the mind is about Martha Stewart. Shares of IM clone took a sharp dive when it was found out that the FDA rejected its new cancer drug. Even after such a fall in the share price, the family of the chief executive officer, Samuel Vaskell, seemed to be unaffected. After receiving advance notice of the rejection, Martha Stewart sold her holdings in the company stock when the shares were trading in the range of $50, and the stock subsequently fell to around $10 in the following months. She was forced to resign as chief executive officer of a company, and Vaskell was sentenced to more than 7 years in prison and fined of $4.3 million in 2003. So going down, Joseph Naccio made $50 million by dumping his stock on the market while giving positive financial projections to shareholders as chief of Quest Communications at a time when he knew of severe problems facing the company. He was convicted in 2007. In 2006, Yoshiaki Murakami made $25.5 million by using non-public material information about LiveDoor, a financial service company that was planning to acquire a 5% stake in Nippon Broadcasting. His fund acted upon this information and bought 2 million shares. So, to avoid all these circumstances, in 2018, the SEBI brought in some amendments. So, according to this, I'm a stranger to my own company. Even though I may be a promoter, irrespective of their shareholding status, the promoters will violate insider trading norm if they possess UPSI or unpublished price sensitive information regarding the company without any legitimate purpose. So don't expect to receive or seek information just because you're a promoter. One of the latest, this one has been about the Cyrus Mistry Tata Sons, where Cyrus Mistry, the former chairman of Tata Sons, has alleged that the information related to Tata Group companies was being shared with Ratan Tata, but nothing has been proved as of now.
Yeah, Sachin, also on this point, maybe Lakshmikant, do you want to add something on the previous slide? I think this is a very interesting slide which you can maybe debate upon. If you go back to the previous slide, Lakshmikant, do you come across any scenarios in the market where we run the risk of promoters actually trying to get more information there than they are legally allowed to collect? Hello, I think I'm not sure if he's on. Okay, so I'll basically take again a couple of examples. There are lots of small companies that are listed, right? So when you have a lot of small companies, the influence on these companies is predominantly coming from promoters, which is fine if they are holding a large percentage of holdings, as well as they are having proper involvement in those companies by way of directorship, chairmanship, or executive roles. But when we take examples of larger companies where the promoters are actually not actively in the company, and they are supporting the company from outside. And in the past, we have had many examples of large companies. We are seeing one here at the bottom as well as Tatas and all. So I'm not saying that these companies don't have the right procedures, but what we are saying is that there is a risk that a promoter may be able to influence a company and the decisions, and be able to seek information about the operations of the company over and above what the regulations are providing him. So essentially, unless a promoter is actively involved as an advisor, or is holding a directorship role, or is on board, he is considered an outsider, just like you, me, and everyone else. And he should be getting the information only if it is a legitimate purpose for that. And this is where I think a lot of companies are going to go wrong in terms of basically in terms of trying to do it in the right way. And maybe I'll again try to check with Lakshmikant, because he had a very good example that he wanted to elaborate on this point. So I've just unmuted Lakshmikant. You want to try again, Lakshmikant? Okay, I think no, he's tied up. We
Okay.
can continue, Sachin.
Yeah, fine. So, what is the amendment actually? The Securities and Exchange Board of India (SEBI) has an exercise of powers conferred under the Securities and Exchange Board of India Act 1992, has made the Security and Exchange Board of India Prohibition of Insider Trading Amendment Regulations 2018 to amend the Securities and Exchange Board of India Prohibition of Insider Trading. What are the major areas that are, or the major amendments that have been brought up in 2018? So one is the addition of the meaning of financially literate, definition of proposed to be listed, inserted into the amendment, legitimate purpose and sharing of information pursuant to a legitimate purpose, trading when in possession of UPSI, code of conduct, definition of designated persons, institutional mechanism for prevention of insider trading, whistleblower policy to inquire leaks of UPSI, or whenever there is a doubt that there has been a leak in UPSI. So broadly speaking, what do we mean by financially literate? Financially literate shall mean a person who has the ability to read and understand basic financial statement. So accordingly, a person can be appointed as a compliance officer if he has the ability to read and understand the basic financial statement, that is the balance sheet, profit and loss account, and statement of cash flows. What is proposed to be listed? Proposed to be listed shall include securities of an unlisted company if such unlisted company has filed offer documents or other documents as the case may be with the board or stock exchanges or registers of companies in connection with the listing, or if such unlisted company is getting listed pursuant to any merger or amalgamation and has filed a copy of such scheme or merger or amalgamation under the Companies Act. What do we mean by legitimate purpose? The board of directors of a listed company shall now make a policy for determination of legitimate purpose as a part of code of fair disclosure and conduct. Legitimate purpose shall
Just to
include
add to
sharing.
this,
Sorry. Legitimate purpose shall include sharing of UPSI in the ordinary course of business by an insider. Persons in receipt of UPSI pursuant to a legitimate purpose shall be
yeah,
considered an insider for purpose
Sachin,
of
just
the.
to add to that,
Yeah, yeah, Lakshmikant. Hello. Yes, Lakshmikant.
yeah, just to add about the definition of financial literacy, yeah, the definition of financial literacy, that is in relation to appointment of a compliance officer. Basically, earlier in the criteria for compliance officer, financial literacy was not mentioned. Now it is very well mentioned along with the definition thereof that the person should be able to understand annual report. Secondly, on the proposed to be listed, this term proposed to be listed was very much there earlier also, but its definition was not there. So what the general assumption was that all the private companies which are going for private equity funding will get listed one day, maybe after 2 years, 4 years, 5 years. So all the private companies should be proposed to be listed, or only the companies who have filed DRHP for IPO or FPO should be listed. So those confusions were there, those ambiguities were there. Now this definition has clarified those ambiguity. Go ahead, Sachin.
Yeah, fine. Thank you. Uh, for the purpose of legitimate purpose, the board of directors of a listed company shall now make a policy for determination of legitimate purpose as part of code of fair disclosures and conduct. So this shall include sharing of UPSI in the ordinary course of business by an insider. And also, the persons in receipt of UPSI pursuant to a legitimate purpose shall be considered an insider as defined earlier for purpose of these regulations, and due notice shall be given to such persons to maintain confidentiality. So, any UPSI information in compliance with these regulations. So, trading when in possession of UPSI. Earlier, the trading in securities was allowed between promoters when in possession of UPSI. After the amendment, the word promoters has been substituted by insiders as defined earlier. Accordingly, an insider can trade in securities that are listed and are proposed to be listed if trading was off market interstate transfer. Both parties had made a conscious and informed trade decision and UPSI was not obtained. The code of conduct. In case of a market intermediary, the board of directors or the head or heads of the organization shall ensure that the chief executive officer or the managing director has formulated a code of conduct after taking their approval. A new schedule, Schedule C, has been specified to specify the minimum standards to be set out in the code of conduct of a market intermediary. Now, the code of conduct is required to be followed by the designated persons and immediate relatives of designated persons as specified in the code of conduct. Institutional mechanism for prevention of insider trading. The major clauses inserted to provide for institutional mechanism for prevention of insider trading are: who shall prepare the institutional mechanism for prevention of insider trading? What will be the coverage of the institutional mechanism for the prevention of insider trading? Whose responsibility will it be to frame the institutional mechanism for insider trading? Who reviews these? And what about the whistleblower policy to inquire leak of UPSI? First thing, we shall cover about who and whose responsibility will it be to frame the mechanism. The CEO or the managing director or such other analogous persons of a listed company, intermediary or fiduciary shall put in place adequate and effective system of internal control to ensure compliance with the requirements given in these regulations to prevent insider trading. The board of directors of every listed company and the board of directors or head of the organization of intermediaries and fiduciaries shall ensure that the chief executive officer or the managing director or such other analogous person ensures compliance of these regulations. Coverage. The internal controls for insider trading. The internal control shall include the following. All employees having access to UPSI are identified as designated employees. All the UPSI shall be identified and its confidentiality shall be maintained as per the requirements of these regulations. Adequate restrictions shall be placed on communication or procurement of UPSI as required by these regulations. List of all employees and other persons with whom UPSI is shared shall be maintained and confidentiality agreement shall be signed or notice shall be served to such employees and persons. All other relevant requirements specified under these regulations shall be complied with. A periodic process review to evaluate effectiveness of such internal controls. So we at Risk Pro, we do provide around 2 to 3 days of audit of this particular activity for insider trading norms compliance also. Review and policy for whistleblowers. The audit committee of a listed company or other analogous body for intermediary or fiduciary shall review compliance with the provision of these regulations at least once in a financial year. Shall verify that the system for internal controls are adequate and are operating effectively. Every listed company shall formulate written policies and procedures which shall be approved by the board of directors of the company. These will be aimed at inquiry in case of leak of UPSI, inquiry in case of suspected leak of UPSI, inform SEBI of such leaks, inquiries, and what are the outcomes. In addition, an awareness among all employees of such policy should be brought about which would enable them to report such instances. So probably from here, the director, Mr. Manoj Jain, will take over from here and take you till the end of the session. So Manoj, I hand it over to you from here. Yeah, I can take it up. Hello, Manoj.
Thank you, Sachin. So yes, we did get a good overview about the definitions, the circumstances, as well as what are the ways in which this can be handled. Now we'll take over and continue with respect to what are the disclosures as well as the implementation aspects of this. So I just want to check whether people can see the screen, and I think they can. Yes. So let's get started. In terms of disclosures by designated persons, so as we know, designated persons are people who have price sensitive information, and what is required is basically define the designated persons so that we are able to bucket them and identify exactly who in the company would be designated as such. So the board of directors, in consultation with this compliance officer, would include these types of people, and they could be employees of the company. They would be employees of subsidiaries, promoters, including investment companies, and any other support staff or intermediaries. So when you talk about intermediaries, you're talking about advisors, you're talking about auditors. When you talk about support staff, it could be a staff within your departments, within your organization. They may not be directly responsible for that activity or the operations, but they could be involved in terms of sending emails, communicating on your behalf, or providing you support. So these people are essentially anyone who's been able to get access to this information, and those would be identified as designated. So once you are identified as that person, what are the disclosure requirements that we need to have? So first of all, we need to get the names of the people, the PAN numbers, any other identifier which can identify that specific person. So the goal is we need to identify the people and their identities so that adequate tracking can happen, using that information if anything were to take place in the future. Along with that, we would need a list of all the immediate relatives of those people, persons with whom such people have had material financial relationship. This would be it could be your spouses, it could be your family, it could be your uncle who has a company and has significant stake in terms of operations with the company. It may be supplying certain contractual materials to your company. So whether it's a blood relationship, whether it's a relative, or whether it's a material financial engagement with your company, all those associations would have to be adequately disclosed. Contact numbers, phone numbers, mobiles have to be provided, as well as educational institutions from where they've graduated and all that. Now, so some of them may seem very, unrelated. I mean, why would you have educational institutes and other things in terms of providing the disclosure? But essentially, I think the intent of the law is that we need to bring all the information together about those people so that we can make relevant connections in terms of, whether there was any leakage of information. In fact, as you would know, in this world of WhatsApp and all the social media, a release of a message goes to thousands of people, and then those thousands of people communicate further. It's very difficult to trace all these things. But if you have information such as educational institution, contact numbers, and all these connections, when the investigation time comes, then you're able to connect these dots. Okay, they're from the same organization or the same institute, so possibly it would have moved from this person to that person. Essentially, the goal is to tighten the regulations so that there is no more such activity of illegal trading in insider trading in the stocks, which is again considered a very, very high crime in India. So let's look at impact. Here we see impact of these amendments. So we have seen different changes. Now, what does it change for you as a company? And that is what we can look at when it comes to changes and amendments impact. The first one is that you need to define a framework and a policy for determination of what is legitimate purpose. So as we have seen in the definition, a legitimate purpose is as a white labeling, or it's considered a white listing of what can be done and when you can share this information. So the regulation starts by saying that no one nowhere, whether in the company or outside, can share information unless there is a legitimate purpose. So you start with a blanket no, and then you open it up with a legitimate purpose, and that is called basically the white listing or the white labeling, you can say, or essentially allowing certain types of activities, and that is legitimate purpose. So a company needs to define what are the activities within that company that is considered legitimate. Maybe tomorrow you are engaging into a deal or a transaction with another company in terms of buyouts or mergers. When that activity happens, you might want to also classify, okay, now this type of information can go to the auditors because they need it for the due diligence. This type of information can go to the lawyer because they need to do a contract. So these things get added and deleted, but through authorized board approval process. And that is one of the changes that has taken place. The other thing is information sharing. Apart from sharing of information for these purposes, the UPSI can only be shared if board is of the informed opinion that it will be in the best interest of the company, and the same would be made generally available within 2 days. So apart from the legitimate purpose, it is opening up another window to board of directors in a very, very specific scenario that, okay, apart from what we have already defined in our policy, let's look at certain more scenarios and situations when we can share that information. And that is the onus on the board to demonstrate that, yes, if I don't disclose this to the general public, I mean, if I don't share it, then there will be harm to the company or to the stakeholders or the shareholders. And anyway, this information will be out in the public in the next 2 days. So I don't think, it's of great impact. Now, the interpretation of this can be very, very loose, and unless you are in this business of advising and consulting in insider trading, it can be quite a challenge. And we will, take up questions afterwards, maybe on some of these topics. But for now, we can assume that this is another window that is provided. The third piece is a digital database of persons having this access or having a UPSI information. Now, this is another massive change that has taken place, which requires that you maintain a database of all the persons to whom the information has been shared along with the PAN numbers. So again, there is a deep linking that is happening at the back end. Now, this information is currently not shared with the SEBI or the regulators, but at some point they can, pull up all this information. So if you are sharing your information with 10 employees, with 100 consultants, lawyers, auditors, all that logging of data sharing will be on this digital platform. Essentially, it is a very, very restrictive edit and delete mode, which means you cannot delete an entry once it has been made on this database. There should be very strong access control so that people cannot modify. So, for example, you may add a UPSI, you say shared with Manoj Jain, but tomorrow, something goes wrong, and when you delete that record, or you change Manoj Jain and make it something else, that is not allowed. And if you do that, that will be considered tampering with the audit trail and information, and that itself will be illegal. So this is another major change that has come up. Just something, since we are on the topic, at Risco India, we have internal audit softwares that companies can use to do these automations. You can always get in touch with us for that. The next one is in terms of maintaining very, very strict provisions. So in case of any transaction in shares by a person, while he has information, it shall be presumed that such trade is motivated by the exclusive information. So that means the onus to prove that no, I was not at fault or I didn't have this information will be on the person who's involved in the trade. The next one is already spoken by Sachin, so I'll skip that. Code of conduct is another document that has now to come up. So while you will appreciate that code of conduct has always been a document in the company, and many companies have this, the additional requirement is that we need to tighten the code of conduct when it comes to misuse of information, sharing of information, the roles and the ways in which promoters can act and receive information. So certain additional enhancements have to take place in order to comply with the 2018 amendments. And in fact, if companies have not done this, maybe it's high time they should do that, because a code of conduct is a document that is considered the Bible when it comes to ethics and integrity of the company. And having adequate provisions and telling everyone to go through the code of conduct annually, making sure employees are reading it regularly, ensures that they understand, first of all, what they need to do. Now, you take an example of a data entry operator, or you take an example of a receptionist in a company. They may be hearing things while they are in the lifts, while they are in the coffee shop, cafeteria. They may be aware that, okay, someone can make a profit or a gain, but they're not aware about their roles and responsibilities and what is UPSI, what is insider trading. So when you bring adequate policy procedures, code of conduct, and all these documents, then people are sensitized about the importance of this. And that's what the regulation is trying to do, is it's trying to make people aware that, okay, there are important things, and let's give it the importance it deserves. We have spoken about this. We need to basically define a list of designated persons on the basis of their roles, functions, and access to the information. So this is quite an exhaustive exercise. It has to be very watertight. There cannot be even a single name that can fall out from this list. You may think a person is not a designated person, but that could be a false assumption based on maybe the role, maybe the roles have not changed, or your HR does not have the right list of roles. So we're talking about a large company. Now take an example of TCS, and it has 100,000 plus employees. HR maintains a list, and you have certain roles. Assuming a person has just shifted from one role to another role, and you're using a database which is having old roles. Now, I'm just taking a very hypothetical example of TCS just to give the nature of the impact of this requirement. If you are using certain assumption that, okay, all these people in finance will be designated persons, or all these people in this department will be designated person, you need to also make sure that the underlying variable used for that assumption is also correct. Whether the roles are actually properly updated in the HR list, employee list, whether the people functions are properly designated as such, then only you can come out with this list. So those are all the controls that have to come into the system to make sure that things are in place. Internal controls were spoken, and then designate a compliance officer. The middle point review by the audit committee, that also has been covered. It's now the obligation that once in a year, internal controls have to be verified that they're operating in effect, operating and properly designed. Now, what this means is, okay, there are thousands of companies, listed companies out there who need to comply with this. There are smaller companies who just put the code of conduct, who may create their disclosure conduct document, legitimate purpose document. They may put all the infrastructure and the policies in place, but they don't go about reviewing it. Assuming SEBI does not change anything for the next 10 years, they would not change anything for the next 10 years. Well, that is not the requirement now. It says that annually it's a mandate that we review the internal controls, whether the list is updated, whether the database is updated, maintained, whether people can modify the database. If you are maintaining database in Excel, who has access to that? So all the internal controls associated to this compliance activity, those have to be reviewed. And that can be done by anybody internally. It can be done by the compliance officer, but the fact that it has been done would have to be in place. And then about leakage of information, so there's a whole investigative process around that if you suspect any leakage, you have to report it, investigate it, demonstrate the root cause and all those things. If there is an actual leakage, then again inquiries have to take place, and you need to report to SEBI, and you need to have all this in a written process. And all the regulations nowadays pretty much have all of this. So if you look at privacy framework, you have GDPR, you have data protection frameworks. There is something called a data breach procedure, a policy that has to be in place. If you look at information security, there is an incident management policy that has to be in place. So similarly, these are considered incidents when something goes wrong, and a whole investigative incident remediation investigative process has to kick in. So now SEBI mandates that define a process, who's going to do what during investigation, who's going to do what during inquiry, what are the consequences, when do we report to SEBI, do we report it with just little bit of information or with a lot of information, and all that has to be defined and board approved. In terms of fines and penalties, it's pretty much 25 crores or 3 times of the amount of profits made, whichever is higher. So the fines have gone up and they are more severe. And of course, the prison term up to 10 years, and that Rajanratnam was there for 11 years. So in that sense, India is a little lenient, and we have generally seen that Indian regulators are not so high on penalties and fines, but they are catching up with international authorities. So as we progress, until India matures, the corporate governance improves, SEBI will keep pushing these limits up. Okay, so I just wanted to pause here, and maybe Lakshmikant, if you had any specific point to add to some of these impacts from your practical experiences when you were working in your prior engagements, what would you think would be some good points for the audience to take over and then take home?
Yeah. Yeah, thanks, Manoj. In relation to trading between insider, the one of the amendment in 2018 is that trading between insiders is allowed. Earlier, before amendment, it was saying that trading between promoters were allowed, even though those were insider. Now that promoter word is deleted, and it is enlarged to include all insider. The practical implication is that in the early scenario, only promoters were able to deal while buying or selling the shares of a company, or during the acquisition of shares of a company between two promoters. Now it says that, okay, private equity firms who may be insider, who may not be promoters because they invested later on, but if a private equity firm wants to sell off as an insider, it can sell to another private equity firm. So the deals between two private equity firms can go through well within this clause. Earlier, this clause was preventing private equity firm, was allowing between two promoters only. Secondly, another amendment which our colleague Sachin and Manoj informed that now HR and IT divisions are also included. These divisions are also included in the insiders, because even secretary division, like company secretary and his secretarial function, even though they do not take part in the main business operation, may not be on a day-to-day running the business target sales achieved, but still because they conduct they help in conducting the board meeting, and they being a secretary department, definitely the whole department is to be considered as an insider. If we remember, in the Companies Act 2003 when came up, even the company secretary himself was added in the definition officer in default. So in line with that, it goes in that line that now the whole secretarial department is considered as an insider for the same. Thirdly, in relation to burden of proof, of course, my colleague explained this. Now, if a person is a connected person, he is presumed to be having inside information, and by chance he trades, it is presumed that his trading is motivated by inside information. Now the burden of proof is upon him only to prove that his motivation of trade was not due to the UPSI. However, suppose an insider trading happens through by
I think we lost the line, so we'll come back to him once he connects in. Okay, so essentially, what can you do as a person of a company or as an employee of a company? Essentially, our goal should be that we should never share any confidential information with our families, friends, members, or in public. We should not trade in these company stocks without proper compliances or confirmation from departments. And as far as possible, if you don't need to know certain information, then don't collect that information. Because it is a very, very important regulation. It has high implications on the reputation. So we have seen the fines. Fines may not be significant, but the reputation that goes associated with this can be significant. So if you don't need to know the information, avoid trying to seek that information or ask your colleagues in other departments, can I get this information? So that is some of the things you can do. And just to give you kind of a very simple example, you're in the canteen, you're in the elevators, and you're very vocal, you talk along, you talk about things about your company. You should be aware that when you're doing that casual talking, it's a good thing, aaj apne ko bonus zyada milega, our profits have zoomed, whatever it could be, you're essentially doing something that you should not be doing, and that could have multiple impacts. Some of it is insider trading related, some of it is other things such as competitive advantage that has been leaked out, data privacy, confidentiality, and more. So these are ways in which leakage happens, and that will be investigated. So if you're in the elevator, you just give a very, very simple innocent news, and someone picks it up and then moves it along and then does trading on that, significant trading. If the determination of that has happened, that that person who has forwarded that information confesses that it came because I heard this person talk and all that, so then you could be caught in that whole investigative process, because it started from you as a person. Although it's very difficult, but today let's not assume that anything is impossible. People can be traced back, instances can be investigated, and that's what is going to happen in these investigation process. So an overall conclusion, let me just confirm this is the last slide. Yes, it is. So in terms of overall conclusion and checklist, these are some of the 4 or 5 important things. You should maintain and update all your policy documentation around what is a legitimate purpose. So that is an important change. You should maintain a list of recipients of this information, which is more or less the people who are going to get this information in the form of a database, which is a digital database. Amend all your codes of conduct and all the other related documents that are required in compliance with these changes. And lastly, you need to bring a monitoring mechanism to review and check for whether all the things you put in place are they working. When the list has to be updated, is someone updating that? When an entry has to be made, is someone doing that? When an inquiry has to take place, is someone making that inquiry of the suspected leakage? So these are some of the changes that have to happen, and some of them are very entity level and soft changes, which can take quite a while for companies to make that change. So it's a culture change, and until you realize that this is an important topic, all your changes will merely be on paper, and that's not what will help the company. A company is going to help only if it's on the ground with the sensitization to the employees as well as on paper. So we have last 5 to 7 minutes on any question that you may have. Why don't you think of any scenarios that are coming to you based on whatever we have heard through so far, in terms of, okay, who's an insider, who's a connected person, am I a connected person with my wife who's working there? So whatever scenarios you can think of, or if you have any specific questions or any challenges in your company, let's see if the three of us can respond to it, and if not, then we can get you the information by doing the research. You can send your questions through the chat window. There is a section on chat, and send the question to staff. That's what you will select, and I'll read it out and I will hand it over to the respective person for responses. Thank you very much for attending, and I'm sure you will enjoy reading more on this topic because it is an important topic. So let's see what kind of questions are coming in, if any, and we'll try to respond to them. Okay, I would request Sachin and Lakshmikant also, you can keep your phones unmuted. So there is one question, in case immediate relatives, example siblings, are not financially dependent, the
Yeah.
employee will not provide PAN or mobile numbers. So this is a question that has come in. In case immediate relative, such as a sibling, is not financially dependent, the employee may not provide PAN or mobile numbers. So I think this is a point that she's trying to make, right? Lakshmikant, this is to you.
Yeah, Lakshmikant. Yeah, Lakshmikant here. Lakshmikant here.
Yeah.
See, if we see the definition of immediate relative, the definition says that one spouse is definitely immediate relative. Second category comes with the parent, sibling, child. Now, in this second category is applicable only if there's a financial dependency, or only if there is a financial dependency for advices, then only it comes. So, in case the sibling is not financially dependent, then definitely he is not immediate relative. So, being not immediate relative, we may ignore inclusion of his name in the connected person. For sibling to be connected person, he has to be immediate relative, but the definition does not allow his if he's financially independent.
Sure. Sure. Okay, so then the next question is from Swati. It says that if my son, who is a major, does not consult for any investment with me, will he be determined as connected person? So again, I'll hand it over to the expert, Lakshmikant. The question is, if my son, who is a major, does not consult for any investment with me, will he be determined as connected person?
Yeah. Now, being major, if there are two conditions for him to be included into immediate relative. First, he should be financially dependent. Second, or or second, he should consult. If he's not consulting, then second condition is not there. So first condition is whether your son is financially dependent. If he is still studying and do not have his own sources of earning, then he is financially dependent actually. And if he has his own sources of earning and is using those earnings for his own livelihood, even though he's staying with you, then he is not immediate relative. So it depends upon his current age profile and what is he doing currently.
Yeah. Are directors included in the designated persons? So yes, so that's another interesting question. They would be included in the designated persons. And the next one is designated person includes promoter group member. So again, what would be your view on this, Sachin? If you want to just take a response on this, designated person includes promoter group member. Is that correct or not correct?
Yeah, as we explained earlier, the promoters are considered as insiders as per the amendment of 2018. So they'll definitely be considered under this category. So the definition for the promoters has been replaced by the word insiders now.
Absolutely. Uh, do independent directors also have to provide PAN, mobile numbers, and their immediate relatives? Lakshmikant, since you're the expert at connected persons definition.
Uh, yes, because the, yes,
Sorry.
because all the directors are included in the definition of connected person, then it do not distinguish between executive director and non-executive director. So they have to provide details of his own shareholding and all relatives in PAN and all those.
Yeah. So as you can see, audience, these things are sometimes they can get very tricky. The real interpretation lies in the definitions. If you get the definition wrong, the whole compliance framework will go for a toss. And it's just not a matter of 1 hour that we can cover everything. In fact, we can debate different permutation combinations, different types of companies, different types of roles and responsibilities. But the real challenge will come for companies who have never been exposed to this. For example, a newly listed company, a startup that has got listed, an NBFC that has now changed from a private limited to a listed company. You can imagine the challenges they will have on day one. And the regulation works in a way that on day one something goes wrong, you're responsible. We have lots of IPOs coming, lots of companies getting listed. They need to be prepared on day one for all these definitions, all these data that they have. They cannot go wrong on day one. So it's interesting. I mean, there are a few more questions, another 3 or 4 questions that have come in. But I think in the interest of time, maybe we'll just take one more from Nitin that says that what is the time for closure of trading window and whether we have to close it before ending of every quarter. Lakshmikant, to you.
There's a trading window. See, there is nothing specified as such about the trading window. The only thing is that whenever the board meetings are about to happen, and it is after the board meeting, the quarterly results are about to come out. That is the time when the trading window closes. And normally, after trading window closes from the day the board meeting is announced, basically, and it again reopens after its results are published in the newspapers.
Sure. Okay, I think we're getting more and more I'm losing track of these. We have some very good active people. There is one Nitin Gupta who's very active, one Rachna. So Rachna and Nitin, will definitely get back to you. We have a list of these questions in our listing. I would like to, conclude this session and thank you everyone for attending and participating. We continue to have more of these webinars in the future on different topics on risk and compliance. In fact, this topic is so important. We are likely to repeat this. So if anyone in your company wants to benefit from it, maybe not you because the content may be more or less the same, but we'll get Lakshmikant to take a whole session on this and maybe, repeat this every quarter because of the impact it has on the capital markets. Thank you very much, Sachin and Lakshmikant. Thank you very much. We will sign off now. Thanks.
Thank you.